Gold remains conflicted by the ongoing dialogue surrounding the next increase in Fed rates. Joining us to help make sense of it all is Kitco's Global Trading Director, Peter Hug. Peter, you missed out on some Fed news while you were on vacation. Welcome back.
Yeah, it didn't look like I missed too much, though. The gold market's only traded in about a $20 range since I left last week.
Well, it might get exciting this week, right? Chair Janet Yellen is expected to give an upbeat report on the U.S. economy later on this week. So what's your take, Pete? What can we expect from Jackson Hole, which is on deck now?
I think Janet Yellen will try to be as optimistic as possible. I still don't believe that they'll move in September, but they want to leave on the table that they're sort of satisfied with how progress is being made with the U.S. economy and the movement towards their target rate of 2% inflation. Fisher came out last week and announced that they were moving closer to that level. I think, again, the dialogue right now is just to leave it on the table. I don't think they'll move in September. And December is so far away. To set up a trade in anticipation of a December rate increase, in my opinion, is much too premature.
So, Pete, if we look at gold now, we find ourselves in this thin market. So which range are you expecting for gold here?
Well, we're still in August. Got another week and a half left to go. I think the market starts to get a little bit more active towards mid week next week. There'll be some volatility after Yellen speaks on Friday. But I think, the recent range over the past couple of weeks, the 1330, 1355 range is likely to hold until we get through to Labor Day.
So do you think maybe the best trade here is no trade, especially ahead of the big Fed summit? Gold seems to be developing a triangle pattern. Could Janet Yellen trigger a breakout?
Could, and it's a thin market. That's why I'm suggesting that there might be some volatility on Friday. My sort of comments over the past almost 3 weeks now is I think it's relevant, more relevant than ever, to hold your core position. It's a very difficult market to trade. It's very thin. You're getting these, $10, $15 pops either side of the market on almost a daily basis. So even putting in tight stops, you're just going to get churned in this market. So if you don't need to trade, I wouldn't trade this market right now. I'd wait for a breakout on the levels, hold your core positions, and come fall, I think there'll be ample opportunity to get into a trade, whether short or long, with some momentum behind that move, as opposed to right now just this jerky movement back and forth on news bites on a daily basis.
Peter, just to wrap, are you seeing the same on the silver front?
Well, silver, as I mentioned to you probably about 2 or 3 shows ago, I thought was a little rich relative gold when it hit a 66-to-1 ratio, and I suggested that it was more fairly valued at around 72-to-1 to gold. And overnight it went to 71.40. It's back just under 71-to-1 against gold. I still think silver could weaken against gold in the short term. But in around the 72-ish level to gold, I think silver's a better buy.
Pete, thanks so much for your thoughts. We'll see you next week.
You're welcome.
And thanks for watching this edition of Kitco's Gold Report. We have Jim Wyckoff up next.